start with audit 3. Fraud, very controversial topic. So fraud and error, very well known to all of us. Fraud is an intentional act, okay, whereas error is unintentional. Now, intentional act to do what? For deception, that is cheating. Fraud is always done with the intention of what? Intention of deception. Deception means cheating. Okay, embedded CAT means it's an embedded audit module wherein a small module test is embedded into the system itself, into the client's process itself. So that module is going to keep giving you information time and again to the auditor, from time and again, telling him about what is happening there. So it is like you send an informer who stays there and who keeps giving you information from within regarding the controls, regarding the automated controls and how the computer is functioning. That is embedded audit. Yes. So fraud. Fraud, we said, is an intentional act to do what? To cheat, for deception by management. So management, employees or third parties also. So who can do fraud, guys? Either management can do or employees can do, even third parties can do. Okay, and it is a criminal offense. It is not as simple as an error. It is taken very seriously by law and it is a criminal offense. Okay. Now, there are two types of fraud. Okay. Now, fraud means cheating, we said. But what is the kind of fraud that the auditor is concerned with? Auditor is concerned with three types of fraud. Okay, only one type of fraud. That is the fraud that affects the financial statements. So, fraud that doesn't affect the financial statement, that doesn't have an impact on the financial statement, is not even looked at by the auditor. So, those frauds, so what are frauds? We said intentional act to deceive, okay. And those frauds which are going to affect the financial statements could be of three types. So the frauds that are relevant to us are of two types. Well, how do you say relevant? It is relevant because it is affecting the financial statement. It is leading to misstatement in the financial statement. Two types. What are the two types? One is cooking the books. Cooking the books is also called as fraudulent financial reporting. Means what? Something is wrongly stated in the financial statements. So that is fraudulent financial reporting. That is called as cooking the books. And the second is theft. Now, when you say cooking the books, I understand it relates to books and leads to misstatement. What about theft? Theft, if it is concealed, you remember, it is always for deception, it is intentional and it should be concealed. Okay, so fraud, if it is in the form of theft, leads to misappropriation of assets. So fraud is basically of two types, guys. Fraudulent financial reporting and misappropriation of assets. What about errors? Errors are unintentional. They are omission or mistake, and example is a inaccurate accounting estimate, unknown, without the intention. Okay, there are different types of error. We don't have to read about that. There is a concept called fraud triangle. Fraud triangle concept tries to analyze how is fraud committed. Okay, because we need to first understand how fraud is committed in order to ensure that it is not committed. Okay, to prevent fraud, we should know the causes for fraud or how fraud comes into being. That part you have to understand. So, this fraud triangle, have we done this fraud triangle in class? We have done this concept, but not from this slide, is it? The fraud triangle part. Okay, so fraud triangle, what do you say? There has to be a pressure or there has to be an incentive for committing fraud. Okay, so and then there should be opportunity. So first there should be a pressure or an incentive to commit fraud, and then there should be an opportunity to commit fraud. After that, there has to be a justification or rationalization. So to commit fraud, three things are required. So they say it is like a three-legged chair. So there is a stool standing on three legs. Okay. So those three legs are pressure and incentive, opportunities, matlab chance of doing fraud, and justification. So I would have definitely given you this example that if an employee is of great financial need, okay, then there is pressure or incentive, and he finds an opportunity to do it. So there is an opportunity to commit fraud. Either some security lapse is there, okay, or some mistake is there. Something is visible, and that opportunity is available to him, either naturally caused or he creates it. And the third is attitude and justification. Attitude and justification is finally he removes his ethics, he kills his conscience and does it. That's called as rationalization. So for fraud to be committed, all the three should be there. What? Pressure also should be there, opportunities also should be there, and rationalization also should be there. If all three are not there, or if any one is missing, can we do fraud if when two aspects are there? No, we cannot do fraud if any of them is missing. That means that the chair will collapse. So if there are three legs and you break one leg, automatically it will fall down. You can't use the chair, right? So in the same way, if you want to prevent fraud, you break out any one of these, then fraud will not happen. How to break out any one of these? Either don't give him an opportunity, that is the simplest thing. Okay, keep all the cash logged, keep your internal control strong, try to impose authorization. So like this, ensuring that, keep checking again and again, monitoring it from time to time. Okay, so that risk should be properly addressed, fraud risk should be addressed. So do not give him an opportunity. Secondly, attitudes and justification and rationalization. So give him moral science classes. Tell him that about water ethics, that it is wrong to do fraud. Okay, so we should only take things that are available to us, not do chori. What is the impact? What is the final repercussion? You'll land up in jail. You'll be worse off than you are before for a few pounds. So why do you do it? So ye wala justification nahi ho. Isiliye you teach him about that. And finally, you could also ensure that there are no pressures and incentives. Means give him enough pay, enough salary that he doesn't need to do chori, that his basic essentials are already met with. So these are three ways fraud is created. All three are required, and by breaking any one leg of the fraud, the fraud triangle will collapse, or the three-legged chair. Facts about fraud. Fraud by nature is intentional. So if it is intentional, it is going to be concealed. It is more difficult to detect fraud than to detect errors. You would all agree. Why? Because fraud is concealed, so it is going to be difficult to detect it, right? So, auditor lacks the technical knowledge and experience which the entity has to detect fraud. Okay, so entity is in a better off position than the auditor to detect the fraud. Why? Because entity has the technical knowledge in the particular business which they are doing. So all those people relate. For example, if you're doing pharmaceutical, people with pharmaceutical background are working as employees. But auditor is a person with audit background. He has no idea about pharmaceuticals. So is there a fraud there? Very difficult, because he doesn't know the technical knowledge is not there. After doing this audit, he goes to the audit of an engineer, construction company. Does he have technical knowledge? No. After that, he goes to the audit of an automobile company. कुछ समझ में नहीं आता. So that kind of background or technical knowledge about that particular business or that particular industry is not available with the auditor. So it is much easier for the entity to detect fraud than for the auditor himself. Fir bhi, who is responsible for detecting? Auditor is responsible. Audit period is insufficient. Team members are fewer in number. So the period within which audit should be done is a very short period of time. We said team members are there for 365 days there in the entity. But auditor is there hardly for a month and a half. So the time is very insufficient. The time is insufficient. It is not enough for the auditor. Also, the team members are fewer in number with the auditor than with others. Okay, so the entity has lot of people, but auditor has few in number. It is easy to commit fraud than to detect it. कोई भी चोरी करना easy है कि पकड़ना easy है? So is it easy to go throw a bomb or is it easy to detect a bomb? When there is a bomb scare, how difficult it becomes to see where it is hidden. But just to throw a bomb and come there, plant a tiffin box, go keep a tiffin box somewhere is very easy. So what we are saying is, auditor is given less time and fewer people to do a more difficult task of detecting a fraud. Whereas client is given more time and there are more number of people in the accounts department and it is easier to commit a fraud. अब देख रहे हो कितना अन्याय हो रहा है auditor. So fraud by nature is intentional. So it is concealed. Sorry, this part we have already done. This has been repeated twice. Therefore, what can you do? Only reasonable assurance can be given for fraud. But nevertheless, is fraud reporting a part of auditor's responsibility or not? Yes, fraud reporting directly or indirectly. How is it directly or indirectly responsible? Can anybody explain this? How is he directly or indirectly responsible? How is he directly responsible? How is he indirectly responsible? Yes, guys. How is the auditor directly responsible? Directly responsible, at least I understand. Yes, he is directly responsible because he is required to report about it. How is he indirectly responsible? Directly, since he is responsible for true and fair view of the financial statement, whether he knows or he doesn't know for the period which he is audited. Okay, and because it will affect the auditor's opinion. So is that direct or indirect? See, direct responsibility is if he is already mentioning in the audit report that there is no fraud or error or we have not come across any fraud. Okay. That is direct reporting. And indirectly, because if there is fraud, we said it is essentially concealed. If it is concealed, means what? There is a misstatement in the financial statements. When I say fraud is concealed, what do I mean by concealed? That means somewhere there is a mistake in the financial statement. It cannot be that there was fraud, but we never showed it in the financial statement, and financial statement there is no misstatement, everything is correct. Aisa ho hi nahi sakta, isn't it? So it is very essential, it is very important that if there is fraud, there has to be a misstatement. And whether the auditor is directly reporting on the fraud or not, he is definitely reporting on misstatement, right? So indirectly, it becomes the auditor's responsibility. It is the auditor's responsibility to ensure that there is no fraud, because he is saying that there are no misstatements. He is commenting on misstatements. That means he should talk about fraud. So there is both a direct responsibility and indirect responsibility of the auditor. Now let's go to, then what should the auditor do? Assessing fraud risk. Fraud risk assessment process, if I have to tell you in a simplified manner, you have to identify and assess the risk of fraud. Okay, so the first process will be to identify and then assess the risk of fraud. Then respond to the assessed risk and gather sufficient appropriate evidence in relation to risk. So if I have to give a summarized version, this is the process that the auditor has. Now this part, audit risk model, this is already done. What did we do about this audit risk? We said audit risk is equal to risk of material misstatement into detection risk. Okay. So audit risk is risk that auditor will not find out where there is a misstatement. So there should be a misstatement and auditor does not find out. Risk of material misstatement, this we have done. So I'm going fast because the same slide we have done earlier in a different scenario. But the slide is the same. So the same thing only I'm explaining again. So I'm going a little fast. So risk of material misstatement, risk that the financial statement contains a material misstatement. This risk of material misstatement could be inherent risk and control risk. So it is inherent risk into control risk. What is inherent risk? The very nature of an item to be prone to fraud or to be prone to misstatement. Okay, and control risk is that the controls, the internal controls could not detect it. That is the risk of material misstatement. That is inherent risk into control risk. Now, detection risk is there was wrong and auditor failed to detect it. That is detection risk. So both these put together only will give you audit risk. So summarized version is audit risk is equal to wrong into detection risk. That is inherent risk into control risk into detection risk. Or you can flip-flop this formula. Put take it on the other side and then put it on the div. This slide we have already done and we have already understood. Now tell me guys, out of all these things, now look into this slide and tell me if you have understood this slide already. Which is in auditor's control? Only detection risk is in the auditor's control. Inherent risk is in nobody's control. Control risk is in management's control. But only detection risk is in auditors. So you will all agree that what should the auditor try to do? He should try to reduce detection risk or mitigate or minimize detection risk. But the detection risk cannot be zero, Wasim. Why? It would have been beautiful, wonderful if I could bring my detection risk to zero. But we all know that we cannot put the detection risk to zero. Why, Wasim? Because of inherent limitations. So there are inherent limitations within audit which prevents detection risk from going to zero. So that's why we give only reasonable assurance. Sampling is one of the reasons. All inherent audit limitations put together. So we only try to mitigate. We cannot eliminate detection risk. Thoda bahut detection risk rahega hi rahega. But we will try to mitigate. How do you try to mitigate detection risk? By reducing materiality. Okay. By checking. Your audit itself is to by checking everything, not only internal control. All audit procedures are for mitigating the risk. So, what is audit procedure? To find out audit evidence is audit procedure. So, ये जो audit evidence आप gather कर रहे हो, that audit evidence is going to mitigate or reduce the detection risk. जितना आप audit करोगे, पूजा sampling, right? So, how much you cover, that much you are reducing your detection risk. The bigger your sample, the lesser the detection risk. Why? Because you're doing audit in a bigger phase. Provided you're doing audit in the correct manner, in the right mode. Okay. So, detection risk is the only component that the auditor can control and he tries to minimize the detection. If you say minimize, and I can minimize through audit procedures, why can't I bring it to zero? Because I don't like risk. Nobody likes risk. Auditor also does not like risk. When it is an unwanted thing, why don't we remove it? Because of inherent risk. I am only talking about why not detection risk be brought to zero. Inherent risk will always be there. This IR rehne do, let the IR remain, let the CR remain. At least DR, why can't I bring it to zero? Audit limitations, right. Inherent limitations, not inherent risk. There is a difference. Inherent limitations in audit. Yeah. Inherent limitations in audit means your audit limitations, accounts limitations, scenario, cost, time, all these limitations. Because of that, I cannot put inherent cost benefit analysis. Isn't it? You do cost benefit analysis. So if you put all, you go on checking for 365 days, or if you check one audit for 5 years, maybe you will be able to remove the detection risk. But it is not worthwhile, isn't it? So because of these inherent limitations, we cannot bring the detection risk to zero. We can only mitigate it or reduce it. Now let's understand this a little more, guys. If you can reduce it, how much should you reduce? Reduce is a relative term. थोड़ा reduce करूं, के और reduce करूं, के बहुत सारा reduce करूं, के और भी reduce करूं. As low as possible, as much as possible. Don't you think these words are nice to hear? But these are all relative. When somebody tells me, I will try my best, am I clear about what he is going to say, what he is going to, how much he is going to try? No, we cannot say, yeah, maximum. Maximum is a relative term. Don't you feel so? So, maximum is a relative term. Okay. So, how much to reduce becomes difficult. So, how do you decide? Yes, it does. It does, Vasim. It depends on the acceptable audit risk by the auditor, correct? Up to the acceptable level, yes. Up to the extent of tolerable mistake. To the extent of tolerable misstatement, I will go on reducing the detection risk. How much to reduce is again dependent on auditor's judge. So when you say tolerable misstatement, some other tolerable misstatement I said, somebody else said something similar to that. Up to an acceptable level. Anyway, so let's go by what I said. So I said tolerable misstatement jahan tak hai, wahan tak I will try to reduce. Matlab to the extent I can tolerate. What is tolerable mistake? The extent to which there is misstatement and you tolerate. It is like materiality. So to that extent we will tolerate. Beyond that we will not tolerate. Then what do? You do detection. This relationship, it is only for your understanding that I am telling you this relation. See, first understand, auditor ke haath mein kya hai? Yahi hai. Detection risk only is in the auditor's hands. Inherent risk, he can't do anything, and control risk also he can't do anything. So total ROM is not in his hands. He can't do anything about ROM. ROM is inherent risk into control risk, which is not in his hands. He can't do anything about it. He can only manipulate the detection risk. So what the auditor does is, he sees whether how much is the inherent risk and how much is the control risk. Based on that, he tries to adjust the detection risk. Because this only is in his hands. Inherent risk and control risk are not in the auditor's hands. So, inherent risk and control risk, if they are high, auditor found out that inherent risk and control risk are high. Now, first tell me guys, how does he find out about inherent risk and control risk? How does he find out about what is the inherent risk and what is the control risk? How does he know? What is the procedure through which he finds out inherent risk and control risk? Risk assessment, guys. For God, auditor does risk assessment at the initial stages. What risk is he detecting? What risk is he understanding? Detection risk. He is not talking about detection risk. Detection risk is in his own hands. So how does he understand what is the inherent risk? By risk assessment. Yes, I will take your internal control assessment also here. Okay. So through risk assessment, he is trying to understand the inherent risk. Then he does control testing. Okay. Test of controls. Through that, he is trying to detect the control risk. We are talking about the same thing in different angles. See, every chapter you are talking about the same audit process, but we are looking at it from a different perspective. It's so beautiful, isn't it? So, initially, inherent risk is assessed through risk assessment. That is not something that he can do anything about. It is totally uncontrollable. In fact, management also can't do anything. It is inherent. So all that he does is he tries to understand. He will not try to manipulate it. Having understood the inherent risk, he will look at how is the control. Is the control good enough to mitigate that risk? Then he understands the control through test of control. But that also is not in the auditor's hands, right? So these two uncontrollables he has understood. Now what is in his hand? Yes, ma'am. Evaluate internal control and analysis. Now what is in his hands is detection risk. तो ये समझने के बाद, ये test करके देखने के बाद, okay, he understands this, he tests this controls. Now he is going to do something about the detection risk. So if these two are high, what can the auditor do? Reduce the detection risk. Very correct. Very correct. On the other hand, I am in a beautiful scenario wherein inherent risk is less, detection risk is control risk is less. Then what can I do? I can increase the detection risk. It sounds very strange. Okay, auditor is trying to increase the detection risk. What does that mean? It means smaller sample. It means reducing your audit procedure. Higher materiality, less check. Perfect, Pooja. Very correct. I can increase my materiality. I can reduce the checking levels. Okay. I don't have to find two tests for one aspect. I can be a little casual in my approach. Why? Because controls are there. Controls are so good that I can be a little casual in my approach. Okay. Risk. Now, what if one of these is less and the other is more? Then what should the auditor do? You can't always say decrease. No. He has to see the combined impact. See, one is less, one is more. Okay. But together, is it high or low? See, there is nothing as high, low. That's all. No. There could be something in between it. But the extent of wrong, he will check. What is wrong comprised of inherent risk and control risk? So if one of them is less, one of them is more. Uska combined impact dekho. You look at the combined effect. If the combined effect is more, you feel it's more, then that much you reduce the detection. Even more, even less so. One thing we understand is wrong and detection risk work they have an inverse relationship. They are inversely connected. जितना आपका wrong बढ़ेगा, उतना आपको detection risk कम करना पड़ेगा. It is not that you can't control wrong. You can only understand wrong. You can check wrong. Okay. But based on your understanding, you control your detection risk.